Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate and Business Podcast. Today is Wednesday, April 20th, 2022, and we have one of our favorite guests on. We have Matt Bush from RE/MAX First out in Macomb County. Matt Bush has been on our podcast several times. He's been on our Hardcore Mortgage Real Estate and Business show several times. The reason why we have Matt on and all our guests on, but particularly Matt, is he really brings a fresh take on what's going on in the existing market. And we also have Lisa Lawson on. Hey, Lisa, how you doing?
Good morning, everybody.
Lisa Lawson is on the road. So, Lisa, just be careful. I'm sure John's driving, but you be careful. Hi, John. How's it going, buddy? All right. So welcome to the Hardcore Mortgage Podcast for today again. Brought to you by Capital Mortgage Funding, always powered by Fairway Independent Mortgage Corporation, Equal Housing Lender. 2289 is our NMLS number for compliance purposes. Got to get out of that way. So anyways, guys, I want to let you know, I'm going to start off with Matt. We're going to come at you. Matt's going to give us great information. And Matt, we're thinking about it as we prepare for the podcast. We like to do current events in mortgage, real estate, business, what's going on in the markets out there. And my question to you is in priority order. Listen, it's April 20th here in Michigan. It just snowed yesterday here. And we all know that there's a lack of inventory. We know that rates are high. We talk about the weather in Michigan because we love the four seasons. At times, I just think that's an excuse for people that live here that we say we love the four seasons. I mean, who wouldn't want it 75 and sunny every day? So we say we love the four seasons. But when the four seasons start infringing upon our home buying process and home selling process, I want to bring up the subject here. In priority order, Matt, do you think this year it's the weather, the lack of inventory, the rates going up? What has contributed to the slow start? Everybody wants to talk about the inventory.
Can I go off the board and say other?
You can go other, man. That's why we have you on here.
So I actually had a record-setting March personally. So I don't think the market's at all slowed down. I think what we're seeing is we're seeing a lot of movement with a lot of trade down families. So a lot of empty nesters, a lot of, late 50s to early 60s retirees, so on and so forth, trading down from those fancy houses in the 28 to 4,000 square foot. And they're trying to move into these, one level ranches in my community here in St. Clair Shores and Royal Oak. And those people who are pretty affluent are in Florida or in Arizona or in Texas for the last 6 months. So I've actually had great success the last 3 to 4 months with my first-time home buyers, with my younger buyers to get their offers accepted because we're not having that much bidding competition, because I would say a good 30% of the market is out of state because they don't want to fuss with the cold. And even those, let's say, late Gen Xers or baby boomers who are looking to trade down, they don't want to be moving in the wintertime. So they'd rather just hole up in their castles and their nice fancy houses, go through the holidays, wait till the weather breaks, and then get back into the market. So I think you're right. There is a little bit of weather factor, but I think the weather is causing a portion of the buyer pool to really just kind of take a TO, like a little pause. But personally, I've already closed 12 deals. Actually, I'll close my 12th deal on Friday of the year.
12 deals in 20 days in April.
No, well, not in April of the year.
Oh,
so
okay. I'm just all right. So
yeah, 12 deals.
I want to capsulize this. And I want to say to you that everybody wants to focus on one or two things. And Lisa, I believe it's all about perspective. And you heard Matt say, and we've said it before, we've said it on the podcast, we've said it on the radio show. It's busy out there. Okay. The perspective is, like Matt says, he's got a lot of buyers,
absolutely.
Lisa. Yeah, go ahead.
Yeah, it's definitely busy. I think, as we've said before, right now, the biggest issue is a little bit of lack of inventory. So I've got clients who, before maybe had to make 2 or 3 offers to get an offer accepted. Now I'm making 6, 7, 8 offers. So a little bit more work on the upfront. And I think that's part of the reason why maybe the numbers look a little slow, because it's taking just a little bit longer to get these offers accepted. You got to be a little bit more diligent. You got to be really on it. Your timing's got to be practically impeccable. You can't be waiting You know, back in the day, you could be like, oh, I love that place. I want to sleep on it. Those aren't really, luxuries that we have at the moment. So I think that's kind of slowing the process down in the beginning a little bit, not the mortgage process, but finding the house process. And, but yeah, and it's definitely not slow, just taking a little bit longer to get going, if that makes more sense.
I think it makes a lot of sense. I think there's a lot of perspective. And I did a little bit of a research about the perspective that people, I think, should have, and maybe they don't know the numbers that are involved. There is not a lack of buyers out there willing to buy homes. As a matter of fact, if you really take a look at the numbers, Matt, and Matt brought this up, okay? He started off by saying the baby boomers are a little bit slower to react now. They want to trade down into the ranch community, ranches. We're seeing that all over the country. And it's interesting because the baby boom generation after World War II, you saw the birth rate and the number of births increase steadily through 1963, 4, and 5. Now, as we fast forward it, it's an interesting phenomenon that really took a break through the mid 60s, all the way through 1979. The birth rate, the number of births went down. And then as it hit the 1980s, okay, and we're seeing buyers, everybody's saying here, what's this have to do with buyers? Well, the buyers that are buying the houses now were born anywhere from 1985, 86, 87, all the way, you ready for this? All the way through 1999, 2000, because that they're going to be turning 22 this year. So if you take a look at from 22 to 40 years old, Matt, and the numbers, it has steadily increased. And this is a crazy number, right? It has steadily increased the birth rate from 1985 all the way through even 2009, but they're not going to buy houses right now. But somebody that was born in 2009 is definitely not going to buy a house, but through 2000, they are. And we're seeing that. So the numbers are there. The point is, there is no shortage of buyers out there, Matt.
Yeah, and I was honestly just doing the exact same research this week. The National Association of Realtors says that the average age of a first-time home buyer is 34 years old. So as George Carlin once said, just imagine that means half the people are over 34 and half the people are under 34. So they can't get much younger than 34 or else they're super young. So really the home buying window is right now, I would say like you said, 85 to 97, right? And if you pull up, it's us damn millennials, as you guys call it. I don't know if John Kolb's on the show, but it's us that we're not straddled with student debt. We've paid some of that off. We're in our career. Most of us have coupled up. Now we have dual incomes to where now we can go afford to buy a house. So you've got this influx of buyers into the exact same amount of houses that were built in the 60s. And we're still competing with those people who bought their first house in the 60s. They just moved out to the suburbs and now they're moving back. So you've got two waves of people and you've got probably, 25% more buyers than the market can handle. So it's not by any means a lack of inventory, because I can tell you, for instance, Remax, we did more sales last year than ever before. And I'm sure you guys are originating more loans than ever before last year. So it's not the fact there's not enough houses, there's just too many buyers. So this isn't a supply problem. This is a demand issue. So it's until we can figure out this demand. And I'm telling you, Harry, last time I was on the show was in October, and you made your declaration that rates will never be as low as they are today in October of 2021. So
and how did that come out so far? Let everybody know how that has come out so far.
Spot on. You pin the tail on the donkey right there. And I'll tell you what, I'm going to have my own declaration that this market will not subside until 2030. Because that's when the end of this generation hits their 34th birthday, which is the average home buying time. So for everybody who's like, well, I don't want to get in now because or everyone who thinks it's going to go down or whatever, we've got 6 to 8 more years of this. So get in now, grow your equity to where in 6 to 7, 8 years, and this starts going down, you can trade up. There's still plenty of room for anybody to get into, but this isn't going anywhere. So anybody who's thinking about buying, it's still a good time. If you're thinking about selling, it's still a great time. Now, if you're in that $400,000 to $500,000, $600,000 range, you've lost a lot of equity in the last 2 to 3 weeks because those interest rates are killing your selling power. That $500,000 house is maybe 475 to 460 because of the amount of interest that's going now into that principal. So those are the only people that are probably losing is your $500,000, $600,000, $700,000 houses. So
yeah.
Everybody else is making out like kings right now.
Lisa, what I'm hearing Matt say, and we'll get into his last comment, what I'm hearing Matt say is, and we've said this, if you are a realtor or you are a mortgage person, this is a public service announcement for all the realtors and mortgage people that listen, because we know they listen. I mean, that's a fact, is that if you're a hard worker in this market, Lisa Lawson, whether you're a mortgage person or a hard worker like Matt Bush, a hardworking realtor, you're going to be able to make a nice living. You're not going to have a shortage of buyers. You're not going to have a shortage of mortgage applicants. And you've got to go out there and you've got to establish, and we said it a long time ago. Why do I have to remind people this? The key to everything is the relationship, Lisa Lawson. The relationships that you have with Matt Bush and your realtor partners out there, that's what's going to win the day and win the deal for your buyers, correct?
Absolutely. So I'm sure Matt can attest to this, because he does listings as well. When you get offers and you're selling your house, your realtor is going to help you choose the best offer. And it's usually going to be somebody that they know, someone with a reputable reputation. What they usually shy away from and what they'll tell their sellers is this is a online approval, right? This came from, I put my information online and it spit out a pre-approval and I want to buy a house, but nothing was verified. Nothing was checked. These types of approvals usually do not close, so they have this, they've left a bad taste in realtors' mouths because realtors, put all this effort, their sellers get all excited. And then a week before closing, they find out they can't close, so they're usually recommending to stay away from those types of online mortgage companies. And they're vowing and they're working with people who have long-term relationships, people who go to an underwriter. Like our files are actually physically underwritten. When you get an approval from us, everything has been verified. We reviewed your documentation. It's gone through automated underwriting. We're just waiting for title and an appraisal. So they're looking for a more concrete approval. And I think that's huge in this type of market. You have to develop relationships and explain to people, this is what we offer. This is what I can do for you. And I think it's so important right now more than ever.
So Matt, I read an article just this morning that said it's not always about highest and best use, and especially now. And to piggyback off of Lisa, in this article, it said, and that's why I brought up the relationship. If you know a lender or a realtor on the other end of the transaction, and you're presented an offer by that realtor that you've worked with, you've heard of, and it has a lender pre-approval letter that with a lender you've worked with and is solid, the offer actually could be a little bit lower, but it's going to close on time, no problem. What does that mean to you right now?
Well, I mean, that's the best part of a highest and best, right? Like it might be the highest offer, but is it the best? Maybe not, because it's not only, everyone's saying, possession after close and all these things, but, just important of it, whether it's FHA or conventional, if you're paying for possession after close or it's free, that lender letter, like Lisa said, is just as important of a factor. If I get 5 different lenders and I've worked with 2 of them, and then 3 of them look like they just literally printed it on like a placemat from a big boy, then there's no value in that pre-approval letter if it says, XYZ home mortgages. I had a really good offer on my last listing, but it's a bank I refuse to work with. And I said, hey, listen, we'd love to work with you, but you've got to bring me somebody that doesn't send, everybody a pre-approval letter for any amount. And they're like, well, we don't want to. I'm like, well, then you aren't going to get this house. And I don't foresee them getting another house anytime soon because, again, highest and best, meaning best terms, best lender, best agent, best everything.
It's really what's best for your client, right?
Absolutely.
Highest and best is what's best for your client. And everybody, we have Matt Bush on, Matt Bush from Remax First out of Macomb County. He is a wealth of knowledge, been on our show, the podcast, many, many times. We're going over a lot of things, and relationships always, first and foremost, in any business you're in, if you have the relationship and the relationship is strong, that's what you got to go with. This is the Hardcore Mortgage Real Estate Business Podcast. Today is April 20th. We have Lisa Loss on. She is the Google of our office. You have a question, you call 1-800-LOW-RATE and ask for Lisa Lawson. She's simply the best. Let's talk about equity appreciation now. Matt, you touched upon it. Equity appreciation, I've got question mark as a slowdown. Go ahead. Why don't you break that down a little bit more? Because I feel that it's very, very important, because people think that they can just slap a for sale sign up and get a max price. Take us through that a little bit slower now.
Yeah, I mean, there is a little bit of a method to the madness, and that's why it's important to talk to a real estate professional. You know, there are more members of the National Association of Realtors now than there ever has been, and that's both a good and bad thing. It seems like really it's, you know, their licenses are coming out of cereal boxes, to be honest. But there's a reason why a real estate professional is going to look at you and tell you what your house is worth, and then they're going to tell you how to get the maximum value of that house. Because it's not always about just finding the number of the value. You know, it's not always about, well, the appraisal said this, so this is what we're going to get. You know, that's very 2018. How can we position a house in today's market to get the most eyeballs on it initially, get the most feet through the door, get the most pens to paper, and get the most offers, to where the seller is not only dictating what amount of money they're walking away with, but what terms are best for their family. You know, that's the biggest thing, especially in a market where people are moving. You know, if I'm going to sell my house, I have to go somewhere. I can't dig a hole and live in the backyard. That's not part of the mortgage process. So I've got to then go find a place. So there's a big difference of, do I want 225 in free occupancy for 60 days? Do I want 230 and I'm out tomorrow on my butt side? Do I want a cash offer that's going to give me more time than I need? So it's all about trying to find position in the marketing. And that's kind of what we're finding out. There's a lot of for sale, there's less for sale by owners now than there have been in the last 20 years. I think that's the stat that I saw. But the reason is, I still see them, especially when I'm driving through town. You know that same for sale sign you find at every Ace Hardware, point with an arrow and an address on it. But they're typically getting 12 to 13% less than their neighbor who lists the same house. And they think, oh, I'm saving money, I'm not paying a realtor. But actually, you're losing about 6 to 8%, because you're still paying the transfer taxes, you're still paying a title insurance policy, you're probably getting talked into paying some other fees too, to where you probably end up actually losing on something like that. So equity's there, but without talking to somebody who physically knows what they're doing and has a plan for you to harness it, it's absolutely pointless. It's like, I don't know, it's like trying to drive your car without gas in it.
Hey, Matt, I'm going to tell you this right now. I mean, I'm sure there's a time and a place for sale by owners, and but now is not that time. And the place in the market right now is that people are being nickel wise. And this is my opinion, okay? And I could be wrong. I'm not above that, but the time in the market right now is that people are nickel wise and dollar foolish if they're trying to sell their house on their own, because chances are you and other realtors would get them more exposure, a higher price, maybe a bidding war. Okay. Maybe they don't know how to handle this because they're just thinking about dollars and cents in a micro environment rather than the big picture macro environment of how many people could be coming through their house. And by the way, do they want to take the time and show 10, 15, 20 people the first 2 days that sign goes in the front lawn? I don't think so. And Lisa Lawson, listen, there are plenty of things that we could do on our own. You could go on the internet and try to do it yourself mortgage. How does that work out for people most of the time? If they don't have a relationship with you, Lisa, and you guiding them through the process, they're shortchanging themselves as well.
Yeah, I mean, there's a lot of things that loan officers do behind the scenes that people don't even understand. We're trained and educated to put the best foot forward for you. The goal for a loan officer is not only for approval, but the best approval, meaning we'll maximize your credit score if that's required prior to getting started, or even through the process. So by the time you're done, your score is where it needs to be so you can get the best rate, the best mortgage insurance based on your credit. There's so many other aspects of what we do. We know what to look for. Sometimes the doesn't throw things off, or maybe somebody else is on a bank account. We know what to show an underwriter and what not to show an underwriter. So having a professional in your corner makes the process so much easier. They're going to tell you, we're not using this account.
Oh, Lisa, what? Lisa, there you are. Hi, Lisa. You're back now. You cut out a little bit, but what you're saying is, and what I want to get back into Matt, give Matt the last word. We'll go around the horn, give Matt, you, and then I'll finish up. Is really in this market, we are really in the 11th year, going into a 12th year of a strong real estate market. Matt has indicated he does not see this letting up for a long time. Just the numbers bear that out. That is fact right now. Those are the facts. The numbers are factual. We've been through now, the last 2 years have been unprecedented with COVID, with multiple offers, overbidding, the serious lack of inventory. We've been around the block on this, and you cannot put a price on experience level with people who have gone through this before. You are costing yourself serious money if you are not with a professional, both on the real estate end, Matt, and on the mortgage end, Lisa. Matt, I'm going to let you finish up. I'm a big relationship guy. It's very difficult for me to do this over Zoom all the time. I'd rather be standing in front of you or being in front of an audience. As you guys know, I never met a microphone I didn't like, Matt. But relationships win the day, don't they?
Yeah, and so do three-piece suits. The other thing is, so just kind of circling back to where we are, like Monday or last Friday, taxes were due. If you just mailed in a number or a check to the IRS without doing your due diligence, you're going to get a knock on the door from Johnny Law saying, hey, let's go over this again. And why don't you come with me? I've got these fancy bracelets for you. Okay. You go to an accountant you trust. And when the accountant tells you that you need to write a check for this amount of money, you write a check for that amount of money, or you risk bad things happening. Now you can Jackson Hewitt or H&R Block your taxes together if they're not all that complicated. That's basically like going to an apartment complex and renting. But if you're going to be in a serious adult, you have an accountant, you have someone you trust with your taxes, and you know the punishment of not following that person's advice. So this is the same boat. So you're in a boat now in the summer. If you're looking to buy and sell, you need to take the advice of someone who's done this before. Last year I did 40 transactions. Sometimes people I meet with, they say, yeah, I'm also talking to this agent, and we pull their numbers up and I show they've done 3 transactions in the last 2 years. So here are my numbers. These are the 40 houses I sold last year. These are the 2 houses that person sold over the last 2 years. Who do you think is best to trust the biggest asset your family has to your name? Here's my marketing strategy. Here's how we're going to make it happen. And 9 out of 10 times it does. So I actually say 99 out of 100, not even 9 out of 10, because it's so simple. So I think it's just about putting things into context, knowing a little bit about a lot, showing people that you care. There's that old Teddy Roosevelt that nobody cares how much you know until they know how much you care. So take an extra second, empathize with your client, find out why they're doing what they're doing, and show them how you and what your experiences can align with their needs. It's pretty simple.
Excellent, Matt. Lisa Lawson.
Yeah, just to piggyback on that, that's actually one of my favorite Teddy Roosevelt quotes. I think the loan officers listen, and I think that's what Matt's really saying is we listen. We try to figure out what the real motivation is. Why are you moving? Why are you buying a house? Is it for your family? Are you trying to create wealth for yourself? Are you a single person? Are you creating a future for a future family? We try to listen and make sure that the products and the loan types that we're pairing you with and offering make the most sense for your situation. And I think listings key. Matt's an excellent listener. He and I worked together for years. I know, Harry, you're always saying we try to listen between the lines, right? Listen between the lines, not read between the lines, because it's often what people say, not what they write. And we try to use our experience to maximize everybody's home buying experience and making sure it's exactly what they want.
Yeah, I appreciate that, Lisa. Always a wealth of knowledge. Listen, everybody, 1-800-LOW-RATE, Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation. Give Lisa a call and the rest of our team, always working for you. I can tell you from experience, Lisa Lawson is always available, much to the chagrin of her husband, John. Hi, John, there. Be careful driving, buddy. I need her back safe and sound, my man. She is very, very good at what she does, everybody out there. To wrap this part of the show up, we are going to have Matt Bush on, the Hardcore Mortgage Real Estate and Business Show, 97.1 FM, Harvey Freed, Harry Glanz, Becky Alley, Lisa Lawson, Matt Bush joining us, 9 to 10, everybody, 97.1 FM. Matt's going to come on. He's going to talk about a whole hour on what's going on. These are just a few of the subjects we brought up today. What's going on in the market? Who's buying houses? We went over some birth years and pertinent data. Equity appreciation, is it slowing down? Don't be nickel wise and dollar foolish. Hire a professional realtor to sell your house. Lastly, relationships, experience. You can never have too many good relationships, and you can never have too much experience on your side. So for Matt Bush, Lisa Lawson, John Lawson, Roberto Beauchesne, our producer and director, is in the booth. He's the man that controls us. Yes, he is. I am Harry Glanz. I look forward to talking to you again on Saturday morning from 9 to 10 on 97.1. Have a great day, everybody.